Ladies and gentlemen, welcome back to the channel. We are going to get into everything you need to know about the broad markets as well as AMC stock here today, but that's not the main point of this video. The main thing that I want to talk about is the title. How either way this plays out, you lead to AMC stock going higher and potentially getting the Moass no matter what happens with ultimately the reverse stock split, or you could just sum this up to the March 14th vote. So we're going to get into all of this key information. The only thing that I ask you to do is that you hit that like button and subscribe to the channel if you like AMC, if you like to make money, if you like this community, and you want to grow your net worth in the stock market. This is the place to be. So first things first, guys, what happened today in the markets? We're just going to dive straight into it. You're getting some bank concerns yet again. You are seeing First Republic falling about 20%. You were seeing other regional banks falling a lot as well. This comes after the backstop, or the bailout really is what you should call it, from the Federal Reserve, the Treasury, as well as the FDIC, essentially guaranteeing all deposits at these regional banks. On top of that, yesterday, you had Goldman Sachs, Morgan Stanley, JP Morgan, Citi, Wells Fargo, Truist, M&T Bank, you had Capital One, you had a lot of banks deposit billions and billions of dollars into First Republic, and they're uninsured. So if First Republic were to go bankrupt, these guys would lose a lot of money. On top of that, First Republic has $34 billion of cash on hand. This should mean their stock should be going higher off of this. It is not. This is a troubling sign for the regional banks alike, and it's spreading. It seems to be spreading a little bit more here today. On top of that, you got the Michigan Consumer Sentiment Survey, as I did bring to your guys' attention in the last video, that shows consumer sentiment is falling off of a cliff. It came in at 63.4. down from 67 in the prior month. An economist polled by Reuters had a forecasted number of 67%. So you're coming in much worse than expectations. This is likely because banks are failing, right? That's not good for overall consumer sentiment, and this can lead to recessions, right? This is a very big foreshadowing of pain to come whenever these surveys start to go downhill, especially the consumer expectations. Well, that's never going to be a good thing. On top of that, you did see the inflation expectations absolutely plummet today to a one-year inflation expectation of 3.8%, the lowest since April of 2021, down from 4.1% in February. You're also seeing 5-year inflation expectations drop to 2.8%, and this is the second time in the last 20 months this has actually happened. So why is Michigan consumer sentiment falling, at least in this survey, and why are inflation expectations dropping? Well, it's because of a recession, and you're seeing recession fears really booming to life here today. You can even see this reflected in the Russell 2000, down another almost 2.5% on the day, potentially the last couple of minutes of trading. If you do get that sell-off, or if it continues, I should say, then it could get a lot worse by the time after hours does start. So you are seeing recession fears across the board. That is the main thing that is really happening today, and that's really all you need to know. Now, as far as AMC, let's run through some of the data you need to know before we get into this conversation of how this inevitably leads to a Moass or a short squeeze-like event. Either way this plays out. Now, live short interest of free float, 24.29%, 125.5 million shares that are currently sold short. You are seeing the cost to borrow rates that are continuing to spike here today quite dramatically. And I've said this a couple times now, so I don't want to sound like I'm beating a dead horse here, but this should not be happening. Flat out, bottom line, no other way to put it, this should not be happening. Instead of seeing cost of borrow rates spike up until the March 14th vote, which to some degree they did, and fall off after March 14th, you're up over 100% across the board. Cost bar average, cost bar max, cost bar minimum. Some of these up more than 100% since March 14th. That's showing you more volatility is to come. This story is not over. And that's literally what lenders are pricing in when people want to take out stock. Those lenders want a higher cost to borrow rate because there's a lot of uncertainty. There's going to be a lot of volatility for maybe a lot of time, right? April 27th, that's going to be the next court date. Maybe it lasts longer than that. Maybe this story goes until early to midsummer. That's kind of my base case scenario. That's kind of my expectation here. And you're seeing from Interactive Brokers, before we move on from this, 166.81% cost bar rates throughout really most of the day. Right, it's been pretty constant at about 166.81. You are seeing about 6,000 shares currently available for trading, and the option activity as well, should we even go to it or point it out, very negative. 18% positive order value, 27 orders totaling $1.88 million. Now on top of that, like I said, you want to watch this investing monitor tool. Fed rate monitor tool is what you can Google to bring you to this page. 26% chance of a pause, 73.8% chance of a 25 basis point rate hike. It looks like that is what is going to be happening, but keep in mind, next Wednesday, there's no good the Fed can do. If the Fed raises rates, not good for the odds of a recession that the markets are currently starting to price in more and more every single day. That's not good, right? Shows that they're kind of like, screw the banking system. It's not going to help, right? If they pause, well, that's going to show that maybe this situation is a lot worse than we think. Maybe the Fed already thinks deflation is here. Again, not good. And a lot of people are starting to call this out, that there's really no win next week coming on the Fed meeting. So you guys want to be prepared for potentially more short-term downside. Although with AMC, it's a little interesting, because if you do start to see some of these margin calls, if you do start to see the markets going down, AMC could bottom first, and you could ultimately see some of those forced share recalls, even due to these regional banks going bust. Lending standards have already started to tighten a lot. So one of the first things, I would say probably the first thing that banks start to recall is those riskiest loans in the markets that have bad collateral that are backing them, or they just have a high volatility around them, which I would think AMC would be like the number one highest volatility asset that you could trade on the market. So I think any loans that hedge funds or institutions have with banks in regards to some of these large short positions, like hundreds of millions of dollars, probably going to be recalled very, very shortly. And especially if you do get more market downside from there, that's only going to make the banks really buckle down the hatches even more. Now, let's talk about this March 14th vote, April 27th, how this could inevitably lead to a short squeeze on both sides of the equation here, whether you are for this or not for this. Well, I think in the short term, we got the court date April 27th. I think, one, there will be a bounce on up until then, right? Because as we do get closer to this court date, people are going to start to say, hey, what are the odds this does actually be passed the way the vote happened? Or what are the odds there's going to be a revote? Or what are the odds that a court is just going to say, yeah, you guys can't do this vote in general. This just can't happen. I think there's pretty good odds at least the can will be kicked down the road, and there's going to be some back and forth pricing in. Right now, it looks like markets are firmly expecting this to go through. You can see this prevalent in the price action of AMC stock as of March 14th. It's been pretty much straight down. Granted, the markets have also been pretty much straight down, especially in the Russell 2000. It has not been very pretty. So there's one aspect of that. I think in the short term, if that were to come back, as you know, AMC could not do this vote, that it's null and void, that it's not going to go through the way that they want this to, and them being AMC, I think that would lead to a lot of shorts caught on the wrong side, because ultimately The short interest without this arbitrage trade was like 18-19%. You're sitting at about 25%, likely a lot higher than that, even if you factor in some of these FTDs that are potentially still on the sidelines that need to be bought back. I mean, you're looking at a lot of shorts caught on the wrong side of this trade. Now, ultimately, if this does go through, and I think market perception right now is that it will go through, who knows? Like I said, as we get closer to April 27th, you're going to have differing opinions. But if this does go through the way that it is right now, if you get the reverse stock split, if AMC does sell more stock and raise more capital, if AMC could, one, pay off their debt, get to a profitable level over really from now until like summer or fall, then I do think somewhere along that line, people are going to look at AMC and say this is no longer a shortable trade. And I think fundamentally speaking, you're going to have the fundamentals at your back. And in that case, obliterate the shorts. Like Adam Aaron said in, I believe, which article is it? I think I have it pulled up. Maybe I don't have it pulled up anymore. But the article in the last video where Adam Aaron basically points out that every time AMC raised capital, raised billions of dollars, the stock actually went higher because fundamentally the stock got better at that point. Even if the stock did take a temporary hit due to actually raising capital, subsequently the stock would rally from there. So I'm really comfortable with both sides here, and the way that I see it is you have 25% legal short interest, let alone shorts that are unaccounted for, right, that have married puts associated with them, so on and so forth. The short interest is a lot higher, and either way here, I think ultimately shorts will have to cover on their short positions, and when shorts do start to cover, I think that leads to the snowball effect that ultimately does give you the Moass, whether that happens because shorts were on the wrong side of this arbitrage trade, or if it happens because AMC is fundamentally strengthened due to this. Either way, I'm comfortable with it. And at this point, I know I've been an investor in AMC for a while now, and so have a lot of you guys. Even if you've been buying periodically, you've been having to buy like every time the stock was at the low, like double up your position size to be at a cost to borrow, you know, or not cost to borrow, but an average price of where AMC is now. You're probably underwater on your position still, right? I think that's pretty safe to say for a lot of people. So at this point, it's not even worth for me recognizing the loss when I know eventually a squeeze is going to happen, whether it happens sooner rather than later due to this being thrown out in the court system and people, like I said, being on the wrong side of this trade, or whether that happens after the reverse stock split were to happen after April 27th, right? I'm comfortable with both sides here, and I think the longer this goes, potentially the larger the squeeze will actually be, as we have seen AMC short interest like continues to rise. It's higher now than it's been since June 2021, and it's literally higher now than it was then. So either way here, I'm feeling confident. I do think there is short-term potential either way you put it, because heading into April 27th, there's going to be people that will get doubtful, that will start to price in. Maybe this does not, last through the court system. Maybe the courts rule that this reverse stock split cannot happen, or the vote at least could not happen in the way that it was conducted. And I do think that gives you a bounce. To how high we bounce, that's really an interesting question. It all depends on how analysts start to feel about this, but either way leads to the Moass. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.